Welcome back.
Now, objectives in simple terms, it is nothing but the target that we have. And strategy is nothing but the action that we have to take to achieve those targets. The targets or the objectives can be divided into two. One is the corporate objective and the second one is the financial objective. Now, the corporate objective is the non-financial objective. That is, it is not related to any monetary terms. Just like you're saying, my objective or my target is to clear the ACCA exam. Is there any dollar element involved in that statement? No, right? So that is a corporate objective. That is non-financial objective. It is not dollar related.
But if you say that your target or your objective is to get a salary of $60,000, then you have brought in a monetary element into your objective. So that is known as financial objective.
So in very simple terms, we can say that a corporate objective is the beginning of the plan, or it is the overall plan that is set, the overall target that is set. And as for financial objective, it is the plan with dollar benefits. That is, the plan or the target will include the benefit in monetary terms. And strategy, as I said, it is the action that we have to take to achieve the objectives.
In order to get clarity about this topic, we will take up certain examples. So we will attempt to group the transactions under the head non-financial objective, financial objective, or strategy, depending on its nature. For your understanding, we will copy the meaning also. Non-financial objective, as I said, it is the beginning of the plan. Financial objective is the plan with dollar benefits, and strategy is the action that we are taking to achieve the objectives. Now, the first transaction, improving the brand awareness in India. So that is an objective. And is there any dollar element that is present in this statement? No, right? The objective is to improve the brand awareness in India. The dollar implication or the benefit that we get in monetary terms is not prevalent in this statement, and hence it is grouped under the head non-financial objective. If you improve the brand awareness, what is the monetary benefit that you get? That is the next statement. Increasing EPS. What is EPS? Earnings per share by 2%. So just look at the statement. There is a monetary benefit or a dollar benefit that is involved in the objective. And hence it has been grouped under the head financial objective. Now, in order to do this, what is the action that we have to take? The action that we could take is acquire a rival chain in a share for share purchase. Whenever you acquire a rival business, there will be lesser competition and it will be a much bigger organization, and thereby we could improve the brand awareness. So that is a strategy, or that is the action that we are taking to achieve the objectives. Now we could adopt other strategies also. We could give advertisement on a large scale. So all those are actions that we could take to improve the brand awareness. Moving to the next example, update to new manufacturing technology. So that is the beginning of a plan. We have realized that our technology is outdated and we should improve the technology. But we have not mentioned how we are going to do it, because that is part of the strategy or the action that we are going to take. And is there any dollar benefit that is included in the statement? No, right? So that is why it has been grouped under the head non-financial objective. Now, what could be the dollar implication, or what could be the financial objective that is linked to this? Achieve a 5% return on the new manufacturing equipment. So we are actually quantifying it in dollar terms. Since it includes the dollar benefits that we get, this statement has been included under financial objectives. Now, how do we implement it, or what is the action that is to be taken? The action that is to be taken is buy a new machine for $200,000. Now, in this particular scenario, there is a popular doubt that comes up in class. Update to new manufacturing technology. Couldn't we take it as a strategy? That is the action that we are planning to take. But please bear in mind, whenever we plan, To update to a new manufacturing technology, we don't need to buy a machine. We could lease a machine also. So this is actually the beginning of a plan. There is a subsequent question that we have to ask. What should we do next to implement this objective? Should we buy the machine? Should we lease the machine? So basically, this statement, you can never group it under strategy. Now, the second doubt that usually crops up in classes, this statement, buying a machine for $200,000. Since this $200,000 is a monetary figure, why can't it be grouped under a financial objective? Because the dollar amount is indicated in that statement. Please note that this statement, buying a machine for $200,000, is not indicating any dollar benefit that you get. The benefit that the company gets in monetary terms is not included in that statement. This is just the expenditure that we are going to incur. That's not the benefit that we get. That is the reason why buying a machine for $200,000 is considered as a strategy or as an action, even though a dollar amount is mentioned in that statement. Now, moving to the next example, reducing unsold stock by 10%. This is considered as a non-financial objective, or it is considered as the beginning of the plan. Just consider that you are the operations head. You see that the unsold stock is heavily increasing and it is occupying a lot of warehouse space. So that is the beginning of the plan. You immediately decide somehow we have to reduce this unsold stock. Please note that reducing stock by 10%, they are referring to the quantity of stock. They have not referred to the dollar amount. Let's see the financial objective associated with this statement. Current ratio improve from 1.5 to 1.6. So what they are saying is when the quantity of unsold stock is reduced by 10%, then the monetary benefit that we get is the current ratio will improve from 1.5 to 1.6. Now, what is the formula for current ratio? Current ratio is nothing but current assets divided by current liabilities. Certain students have asked me, ma'am, when the unsold stock is reduced by 10%, stock is a part of current assets. So when the numerator reduces, how will the current ratio improve from 1.5 to 1.6? So I will give you an example to make that clear. Now, suppose presently the current ratio is $1,500 divided by $1,000. So right now the current ratio is 1.5. When you reduced the stock by 10%, say in monetary terms, it amounts to say $200. We are just taking an assumed figure. So what should we do? We should reduce $200 from the numerator. But please note that the reduction will take place not only from the numerator. Say, for example, we had utilized a bank overdraft for financing this extra stock. That is, this $200 of stock was financed by a bank overdraft. Bank overdraft is a current liability. So as soon as we reduce the stock by $200, then we don't need to have so much of a bank overdraft. The bank overdraft can also reduce by $200. So a reduction in current assets will be followed by a reduction in current liabilities as well. That is the reason why we can reduce an equivalent amount of $200 from the current liabilities as well. So what will be the end result? The current ratio will be 1,500 minus 200 or $1,300, and current liabilities will be 1,000 minus 200 or $800. So the revised current ratio will be 1,300 divided by 800 or 1.6. So that is how the current ratio is getting improved by a reduction in stock. Whenever we reduce a current assets, the amount that is required for financing that current assets can also simultaneously be reduced. The improvement of current ratio from 1.5 to 1.6 is a benefit that we get in monetary terms, is grouped under financial objective. Now the strategy. How can we consistently reduce the quantity of unsold stock? So the strategy that could be adopted is implement a just-in-time system. Now, what do you mean by a just-in-time system? In order to get full clarity, what I will do is I will explain the current situation. That is, there is no just-in-time system. Say there is a budgeted production of 1,000 units and the actual demand or sales is, say, 800 units. Then what will be the unsold stock? Unsold stock will be 1,000 minus 800 or 200 units. Now, in just-in-time system, you do not have a pre-planned budgeted production. What you do is you see the demand that is prevalent in the market. So you first take 800 units and the just-in-time production will be 800 units only. So will there be any unsold stock if you produce as per demand? No, right? So that is the meaning of just-in-time system. Now, the only challenge in a just-in-time system is we need to have a close collaboration with the suppliers, because when we get the order itself, we have to call them and we have to get the delivery of the raw materials immediately. And the production process also should be really fast so that we can meet this demand without delay. So a lot of planning and coordination is required for a just-in-time system, unlike the traditional method where you go on producing, then you sell, and then you are left with a lot of unsold stock. So what they are saying here is, in order to reduce the unsold stock by 10%, they will go in for a just-in-time system. So implementing a just-in-time system is a strategy that they are going to adopt, or the action that they are going to take to achieve this objective.
Now, the meanings that have been written here are the simple meanings for helping you to tackle the multiple choice questions. That is, whenever you are asked to decide whether a particular transaction is a non-financial objective, financial objective, or strategy, then you can go by these meanings. Now, we will see the refined definition of the non-financial objective, the financial objective, and the strategy. Non-financial objective is nothing but the guiding targets. That's the overall target, and it does not quantify the monetary benefit. And as for financial objective, it is target specifying the monetary benefit. So we will just use the word monetary benefit. And for strategy, there is no major change. We can say strategy is nothing but the action taken to achieve the objectives. Now, you all know that there are three hierarchies of management. What are the three hierarchy levels? One is the corporate level, the second is the business level, and the lowest level is the operational level. Now, corporate level is nothing but the top level management, and they make decisions related to the company as a whole. The next level, the business level or the middle level management, they take decisions relating to a business unit within a company. Now, what do you mean by a business unit within a company? Suppose you're running a company and you've got two divisions. One is the pharmaceutical division and the other one is the cosmetic division. So this pharmaceutical division is a business unit within the company. So the middle level management or the business level take decisions relating to the business unit within the company. And as for the lowest level, the operation level, they take decisions relating to the day-to-day operations. Now, if you see the objectives and the strategy, the brand awareness, the earnings per share, acquiring rival chain, that all concerns the company as a whole. So those decisions are taken by the corporate level. Updation to new manufacturing technology, that is all relating to a particular business unit. That is done by the business level. And finally, reducing unsold stock, reducing debtors, all these are related to the day-to-day operations of a company. So those decisions are taken by the operational level.
Now we will look into the financial objective in more detail.
Now we know that financial objective is a plan with dollar benefits. But what is the primary financial objective? Now the primary financial objective is shareholder wealth maximization. Now, if you are a shareholder of a company, how will your wealth be maximized? There are just two methods. Either the share price should increase, so you will be able to sell the shares at a higher rate, or you should get dividend from the company. Only by these two methods will your wealth be maximized. So, the two methods in which the shareholder wealth maximization takes place is either by an increase in share price or by an increase in the dividends. So you might wonder, what about the profits of the company? Why can't we take the profit maximization as the primary objective? The reason is simple, because you could increase the profits by creating an artificial hype. That is, if you do an extensive advertisement, then maybe the customers will buy your product in the short run. But gradually, when they realize that the product is not so good, then they will stop buying. So initially you might get a high profit, but that profit might not sustain in the long run. So just because you got high profits doesn't mean that it is in the interest of the company. Or if you take up a very risky venture, then again, maybe the profits will be high in the short run. So profit as a criterion cannot be treated as the primary objective, but you could definitely take it as a secondary objective. So secondary objective could be increase in profits or increase in EPS, or the earnings per share. Now earnings per share is also a ratio which is linked to profits, because earnings is nothing but net profit available to equity shareholders. So whenever questions are asked regarding the primary financial objective, your answer should always be shareholder wealth maximization and not increase in profits.
That's it about objectives and strategy.